Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What is good, everybody? The market is seemingly recovering. Hopefully, by the time you guys get to see this, happy Thursday, one day before Bag Fortification Friday. Hopefully, you're having the week that you want to have. I know I am. We're going to jump into the topic of discussion. And actually, this topic of discussion is going to lead into another episode that I'm going to break down for you. So next week's episode, provided the market isn't doing something crazy. And honestly, I think outside of the first week of the month, if the market is doing something crazy, I'm going to have special Friday drops if we have massive upswing or massive downswings. Because I kind of liked, granted, I did put off the episode last week, but I kind of like being able to tap in as things are happening to, give you guys a heads up on what I'm doing, what I'm seeing, and where I'm at. As it sits right now, we've got a little housekeeping to do. So before you guys get in, because we're going to talk about the topic of this episode is 21 Capital XXI the next evolution of MicroStrategy? And I'm going to give a breakdown of the company, why I am accumulating it, my targets, which I've given before, but this is actually going to be a 21 Capital specific. So shout out Jackie Mahler. He's the only reason that I know about this. Obviously, he's a champion of it. And they're putting him out as the face of the company. And I'm here for it. The next generation, it's a play for the youth. We'll see what they do, because they're not waiting to ask to be given power. They're just taking it, and I respect that. Before we get into it, I got a couple of requests for you. Go ahead and like the video on the way in. If you've been here, especially if you've been here more than twice, please subscribe. There is a new button, and actually, let me just pull up a random YouTube video here. Hold on, let me go jump on YouTube real quick. And we'll pull up a video. Let's see here. We're going to go ahead and make this muted. But this is somebody that I watch, so we'll go ahead and give a shout out. Give a shout out to Health and Wealth. I do like him. I listen to him over on my TradFi stuff. We have some similar strategies that we're running. For those of you who are watching, oh, they don't have it on here. Huh. Okay. Or maybe do you have to go to an older video? Well, okay, so maybe it's only on the phone. I have seen it on the phone. There's a hype button. If you scroll down there at the bottom, that you can hype the video up. So they're wanting us to ask you guys to hype the video. I guess it helps algorithmically. Maybe not more than hitting the like button. So like if you got some hype points, they give you like X amount, you can hype videos up, and it allows people to dictate the algorithm versus the AI overlords. So give me a hype. Most definitely, for those of you who are already subscribed, share the video, get me onto the algorithm. Obviously, it's what we're supposed to do. So that said, we're going to go in and we are talking about 21 Capital. Now, I'm going to go ahead and pull this to the screen. I'm going to go through their little dossier that they have, because there's not much on their website right now, which could be concerning to some people. But before we get into that, I want to go ahead and drop the key aspects of 21 Capital. Their mission. Now, this is what their business, what this SPAC, what this culmination of SoftBank, Tether, Jack Mallers, the overlords of finance to make this the juggernaut that they're wanting it to be. Their mission is to maximize Bitcoin ownership per share, BPS. For those of you who are in the know, for those of you who aren't, we refer to a metric that is a new metric for Bitcoin treasury companies as BPS, Bitcoin per share. For shareholders, and advance Bitcoin as a superior, secure form of money. Now, those of you who know me know that I don't look at Bitcoin as money because it is deflationary and not inflationary. So if I'm given an option to pay you in dollars, I'm going to do that because you spend the bad money and you hoard the good money. This is a tale as old as time. When they started clipping coins way back in the when, people held the whole coins and spent the clip coins because they were forced to value it the same as the whole coins. So you sell and spend the clipped coins, you save the whole coins. Bitcoin is the whole coin in this case. Your dollars are the clipped coins. So spend dollars, save Bitcoin. It's easy. That said, moving on, the next thing that you want to look at for a company, specifically when we're looking at 21 Capital here, is the leadership. So who's running 21 Capital? The CEO is Jack Mallers, and he has the backing of Tether and SoftBank. Tether is a juggernaut. They are insane. I mean, as far as crypto goes, that is the gold standard for dollar stable coins. There are a few other ones. None of them are as highly utilized as Tether. USDT, it is what it is. Game over on that for me. SoftBank, another juggernaut. They're involved in a bunch of stuff, but they're also trying to be involved in the future. They're moving to where the ball's going. That is who is backing this. Jack Mallers is the face of the company and who is leading it, because who's not going to listen to an impassionated Jen, whatever he is? He looks like a kid. He's an adult, but he's just gonna, like, you're not gonna get mad at Jack. Like, what are you gonna do? Give him Jack's yelling at you. What are you gonna do? You gonna be mad at him? You gonna be mad at him? You can't be mad at Jack. Like, it's Jack. It's a grown man, baby. So, and he's been in crypto for forever. Like, he was a kid. He grew up in crypto. So if there's somebody who's going to speak for the youth, and I do respect his impassioned, it's not a word. I just made that up. It's like nuclear. His impassioned speeches about the space, about how he feels about the space, his mission. The kid's on mission. Like, no questions asked there. Their business model diverges from a traditional Bitcoin treasury. Unlike a traditional Bitcoin treasury, 21 Capital aims to generate cash flow through Bitcoin native services like lending and brokerage services, rather than just holding Bitcoin or selling bonds to buy more Bitcoin. Now, this is where they diverge from MicroStrategy, which is a part of my amplified Bitcoin portfolio as well. It's kind of the big dog in there. But a lot of other companies are kind of trying to replicate their strategy, and it's kind of important from a business perspective. It's like, okay, well, first principles, if every business did this model, would it work? And I'd be like, no, because no one would make anything anymore. Everyone would just be selling debt to buy Bitcoin. And then after the Bitcoin runs out, they're now selling debt to swap Bitcoin amongst themselves and us. Like, first principles, you cannot just buy Bitcoin and sell debt. Like, because you got to have a way to pay the debt back, which means that you're selling off the Bitcoin. I mean, obviously it's a round robin. I think as individuals, you could probably get away with that because it's the buy, borrow, die ideology. But as a company, I mean, you at some point, somebody's got to make something. Like, a good has to be exchanged. So MicroStrategy did it first. There's a couple of other contenders that will be able to ride the draft. Do I think every company that does this is going to succeed? No. I believe most of them will end up getting absorbed by other companies, and MicroStrategy will just do what MicroStrategy does because they started doing it first and they've already got their system running. People are going to catch them doing what they're doing. So I do like this. It's a divergent business model, which is the main reason it's in my holdings. It's also what makes it one of the riskier positions that I have. Their market position, they are currently listed on the NYSE. The firm offers a way for traditional capital markets to gain exposure to Bitcoin. Another thing that you want to look at is the financials. Now, see, this is one of the things that I'm not happy they don't have up on their page. As of 2026, the company reported substantial Bitcoin holdings with an average cost of roughly $87,280 per Bitcoin, but has faced downward pressure on its stock market volatility. That's because they're underwater. We're fighting to get back to 72. Like, they bought in at 87, which was great when we were over 100. Not so great now that we're down in the dumps under 80. So that's one of those things that you gotta look at. It's a good buying opportunity for those of us who are long term, and we're going to get to talking about that here in a second. But let's go ahead and go through their 21 Capital dossier, the institutional standard for Bitcoin. The abstract. This is the description of what this paper says. I'm literally just reading it. You guys can go to XXI. I will put this in the description when I do the upload. I'm going to leave this page up here until I get around to that. I will put it down in the description in the comments. I promise I will get better about that. I am sorry for the ones that I didn't do. Okay. It'll be right up there at the top. There's a section where it's like reference or something like that. And it is there. So this paper introduces the XXI standard, a model built on Bitcoin's fixed supply designed for investors, institutions, and capital allocators. That is what I consider myself. I am not an investor. I am a capital allocator. I move around income. I produce income. The income at the end of the day, the portion of it that is saved, is used to buy Bitcoin or amplified Bitcoin. That's just what we're doing. 21 lays the groundwork for the future financial structure built on top of and designed to scale with Bitcoin. Let's jump onto the introduction. This is section 1. The existing financial system operates on assumptions of endless expansion, debt monetization, and systemic opacity. What that means is, I'm just going to go ahead and stop and get my 2 cents throughout here. What that means is the traditional system, they don't want you to know what's going on behind the curtain. It's like the Wizard of Oz. There's a big screen. You can't see behind it. They're doing magic back there and telling you they're doing you a favor when realistically you can buy less stuff every year because they're continually on the other side of that curtain breaking the money, breaking the monetary system. The money that you spend every day, they're finagling it so that they get an advantage, and they're telling you to save in the bank, and you're following the Dave Ramsey plan, and somehow you can never buy that house that you looked at because it's inflating more than you're getting paid. It's inflating more than your raise every year. If you're getting a raise, who's getting a raise? Hit me down in the comments. Are you getting a raise every year? Or do people still give cost of living? Because it seems like a lot of people think they don't have to. Moving on. Bitcoin is the antithesis. It's infinite, transparent, and incorruptible. This is the truest words ever spoken. It's why I jumped off the porch. Basically, everybody talks about how long it took them before they finally got it. I read the white paper. Now, it took a little bit before I just started buying it with money, but I started mining immediately. I was like, oh, I can get some of this stuff for free. Absolutely. No questions asked. And that was back when you could build a little Turtle Burger computer and you could mine yourself some Bitcoin. Not that and that actually, they were saying that it wasn't worth it then, but I had a place that had free power. Sorry for that guy. His energy bills were probably a little bit high for the years that I lived there. But, we were scraping by what we could. I don't believe I ever got a whole one from mining, but I got a good start. It started me off in crypto, and then I ran off the course trying to get rich next Tuesday, like you do, and then I got my mind right. So, but the understanding of Bitcoin in general, first time I looked through the white paper, kind of set for me. It was, oh, nobody can look at you and judge you based on your skin. Oh, trustless. Oh, nobody can tell me I can't do this, because during that time period, I was a firm believer and an avid runner in the victim Olympian. So I thought everybody was just trying to hold me back for some odd reason. And then I realized it's not necessarily that people try to hold you back. They try to hold you to where they're at. And in the process of learning this, I found Bitcoin. I was like, oh, I can buy this and nobody can tell me what to do. Nobody can keep me from buying it. There's not going to be some metaphorical force that says, hey, your Bitcoin is gone, we're going to take it away. Like, not unless I give it. That's cool. Self-custody, always been a thing. 21 is a corporate entity constructed on that foundation. It does not hedge against fiat collapse. It opts out. I like that. Opting out, I think that's important. It's important. I mean, the best way to speak is with your dollars, and everything that we know about the current administration, the previous administrations, the one thing is for sure: any continued debasement of the currency, and I'm speaking specifically of the American currency, I don't care what anybody else is doing. Any debasement of the American currency is robbing the future of the American citizen, in actively making us poorer in the future to make us think we're doing something now. We are digging a hole. America has a credit card problem. America needs to actually be on the Dave Ramsey plan. That's who needs to actually go talk to Dave Ramsey, is America, our financial institution, the Fed. They need to go talk to Dave Ramsey. They need to cut all the credit cards up and get a bunch of envelopes and start stuffing cash in them, and that's what you get to spend. Because every time we give people free stuff, every time we print off money, every time we go to war, our dollar becomes worth less. You can buy less. People actually saw it noticeably over COVID. We still haven't recovered from that. They're like, oh, well, inflation's down to 1%. If inflation's at 1% now, it's still spiked over 50+%, 20+% minimum over COVID. And that was year over year. That wasn't 120% spike. It was multiple. Now it's only going up 1% again. And we're supposed to be happy about that. Like, we're up like 80% though. If you go up 80% and you didn't get an 80% raise, you can't buy as much stuff because you're still getting the same paycheck that you were getting over COVID, most likely. You got to quit your job to get a raise. That's crazy. You're a good employee. As opposed to trying to retain you, they would rather you quit every 3 years to go get a raise because that guy is only going to pay that. Then you go get your raise and you got to go wait 3 more years to quit that job to get the next raise because everybody is apparently just paying what they're paying until they need somebody new. You don't want to keep the guy who's been there loyal with you. You want that dude to leave. You're going to bring in some other idiot at a higher pay than that guy to get him in here to do the exact same job. Because for some odd reason, these owners don't value loyalty anymore. They don't care about you because this is the world that we live in, because everything's collapsing, because the money's falling apart. That's where we are. And that's the reason those of us who have adopted a Bitcoin standard, we are opting out actively. Yeah, I want to retire early. Because honestly, as somebody who has to do something to keep myself occupied, I'd rather do something on my own terms than work for somebody so they can go on indefinite vacations while I can barely eat. That just doesn't sound like a good value proposition to me. My job is not to exist as a resource to fulfill someone else's dream. It's just not. And I don't think any of yours are. So I'm not loud quitting. I'm revolutionarily quitting. I'm not only going to get out of this system, I want all of you to be able to do it. So that way we can all go do the stuff that we want to do. And like, if you're not appreciated, just quit. Stay home. I'd rather stay home and go to the gym than be taken advantage of. And that's what we're on over here at Future Financial Strategy. And, 21 Capital seems like they're on the same stuff. So in accordance, its operations, its treasury, and its mandate are aligned with Bitcoin's 21 million hard cap, designed for a future where economic value is measured in Bitcoin terms, not diluted fiat abstractions. Love it. Moving on to section 2, advancing Bitcoin adoption. This is one of their goals that falls under their mission. The global adoption of Bitcoin will not happen passively. It must be built. Businesses add value. Businesses build. 21 exists to accelerate this transition by increasing both understanding and access. This includes producing modular education content, building branded media that resonates with both institutions and individuals, and embedding Bitcoin native storytelling into the financial mainstream. 21 aims to become a leading content layer for Bitcoin, a media and educational force that normalizes, explains, and expands Bitcoin's relevance across industries. This is so important. It's so important for so many communities, so many people that feel like they're if you are running in the Victim Olympics, if you feel like you are marginalized, disincentivized, left out, barred out, that there's some creepy old white man behind a screen that doesn't want you to get rich and is actively restraining you from doing so, your excuses are gone. That is what Bitcoin's for. Bitcoin fixes that. And you have a company like 21 Capital that's going to be focused on producing educational content to tell you exactly how and why that is the case. That is beautiful. The more people that understand it, the more people have the option to get out of the sinking boat, because that's where we're at now. We are at a pivotal time in history where we are witnessing before our eyes. We are living history. We've been living a lot of history. A lot. We've lived through a lot of very historic, pivotal, jaw-dropping, awe-inspiring, horrendously horrifying moments in history for those of us who are millennials, geriatric millennials, even Gen Z, but millennials specifically, because we were before the internet and in the midst of it. They wheeled the TV into the classroom on us on 9/11. We saw it. It's crazy. And now we witness the internet happen. And I tell people that all the time. They're like, why are you so gung-ho about Bitcoin? It's because I lived in a household where I was getting AOL discs to dial up on 56K on tying up my grandmother's phone line, who was actively working in corporate America in C-suite. And they didn't invest in the internet, in none of it. They watched it go by, saw me on the internet all the time as soon as it started, dialing into mud boards to play games when it was just words you had to read. And they didn't invest in the internet. I'm on it for as long as I can be. They're kicking me off as soon as they go to bed. I'm on the internet all night, on the chat room, in AOL, ASL. Those of you who know, if you know, you know, just in there hollering it, trying to holler, shooting your shots at anything in the chat room. You don't know what's on the other side of the chat. It was just different times. But I lived that transition. And when Bitcoin came along, I'm like, oh yeah, I'm not going to do what they did. Like, that's crazy. Like, I'm going to get some of this just in case it works out. And then as it started to work, I was like, oh, okay, I get it. And it's worked for me. It's provided me my house. It's made it so that I was able to get a few cars. My last 3 cars were while I was in crypto. It's changed my outlook on finances. It's been a pivotal part of me getting my financial structure in order for me. Just took my BMW in for the first service. It's $2,000 to get that bad boy up to snuff. Used cars, it's what happens. But proper maintenance gives you longevity on your vehicles. Take care of your vehicles, people. Get your maintenance done. The ability to afford that, everything that I'm doing now, is all a foundational base of me adopting a Bitcoin standard and looking at finances differently. So, yeah, I think it's amazing that the adoption advancement, that's going to be important because people don't get it. They hear me and they think I'm just banging pots and pans and I'm the guy standing behind the sign in a parka that might or might not have clothes on underneath it, screaming in Times Square that the end is nigh. But financially, it is, and you're living through it. So get yourself educated. Number 3, the corporate treasury on a Bitcoin standard. At its core, 21 Capital is operating a company whose treasury does not rely on currency hedging, bond portfolios, or cash reserves designed to lose value over time. The reason your cash reserves, for those of you who believe that cash is king and your dry powder thesis, over time, if you're holding for long periods of time, I understand having dry powder for 6 months or less. If you have dry powder for a year, you're losing buying power. Dollars are inflationary. If you're holding them long term, or if you just like seeing cash in the bank, that cash can buy less stuff every single year. Every single month, actually. You can buy 1%, 2%, 3%. I think the happy medium, like 2%. Month over month, you're losing buying power. So, like, if you had to go buy something with that, you're losing buying power. But you're trading, so you're hoping that something dips below the value of what you bought it for. And I get it, but it's designed to lose value. So when you have millions, hundreds of thousands, heck, over 10,000, I think over 1,000 to me personally, because I don't like losing money. But you over $10,000 and you're losing 2% a year. That's not good. That's not good at all. Like you're losing the ability to buy stuff, but you're happy that the number doesn't change. Like that's a cognitive dissonance that makes it so that people just stay peasants because they don't understand money. You're super educated, but you're broke. You're super educated, but you're hundreds of thousands of dollars in debt. And you're broke. And you're going through multiple life crises over and over and over again. How many times are you going to run into the wall? How many times are you going to not be secure? How long are you going to live under the stress of everything in your life is broken, so you have to go to escapism, you have to drink, you have to eat those gummies to be able to sleep at night, because the looming shadow on your back never goes away because of your financial decisions, your life choices. How long are you going to live like that? It sounds terrible. It sounds like a terrible existence. And from the looks of it, it is. You don't age well. You don't look good. You're not happy. You smile big for Instagram and all your pictures, and you're miserable. You're a miserable person. And if anybody brings up anything real in conversation with you, you don't want to talk to them, and they're negative while you're broke. I don't know. I don't get it. It holds Bitcoin directly, strategically, and with a long time horizon. The treasury isn't designed to outperform inflation. It's designed to render the concept of inflation irrelevant. Spoiler alert, you can do that with your finances. Double spoiler alert. You don't need a financial advisor to tell you how to do it. It's pretty simple. I'm going to do a video breakdown on it. It's not going to be, it might be tied into next week's video. We'll see. We'll see. Section 4, base layer. Bitcoin is not just a store of value. It is a financial infrastructure. 21 is built to explore and extend that infrastructure, developing a corporate architecture capable of supporting financial products built with and on Bitcoin. This includes native lending models, capital market instruments, and future innovations that will replace legacy financial tools with Bitcoin-aligned alternatives. The 21 standard envisions a world in which financial systems do not interface with Bitcoin, they originate from it. And it's just, this is a totally different way of looking at it. They're attacking the existing financial structure. They're evolving the existing financial structure. This is going to where the ball is headed versus trying to be where the ball was. And historically, a lot of communities, a lot of cultures, specifically in America, those that are not at the top, are consistently running to where the ball was and then wondering why the party has moved away from them. Like it's literally the financial equivalent of white flight, except for I would say it's rich flight, because like all the poor people, it doesn't matter what color you are, if you ain't got money, like by the time you get onto something, all the rich people are gone. There's like, oh yeah, we was doing that like 8 years ago. Enjoy whatever scraps are left. And then the poor people sit there, fight amongst the scraps, talk about how they made $300 in a trade a couple of times a week and they think they did something. And then you see them never not posted pictures of them with drugs on the internet because they sell drugs. Like, you're a drug dealer, you are not an investor. But like, nice try. Like, you can fool the fools. Like, that's great. But they're never moving forward. They're never evolving beyond whatever they're getting to second, is what I'm saying. And Bitcoin allows you, if you adopt a Bitcoin standard within your own personal finances, the ability to actually start making it so that the money that you quote unquote save is actually worth something way down the road, is actually able to be utilized. You're actually able to move strategically with Bitcoin. Like, I can do the same stuff that I can do with my house with Bitcoin. I can get loan products with Bitcoin where I don't have to sell it, so that I don't have to catch that tax burden from the sell of the Bitcoin. There's a multitude of financial tools that you have available to you when you get to the other side of, oh, I've just got to have something, then I have to sell it for dollars and lose the asset altogether and then start over from scratch. And now I got to start saving up again to do this all over again. You save up all year to go on that vacation to take your 400 pictures so that you can filter them out and make it look like you're doing something all year on Facebook and Instagram. We know what you're doing. The people who go places know you're not there when they're there. Okay. And you blew the whole load, your whole savings to do that. You're never going to financially recover from it. So then you just start the process over, nose to the gridiron, for the next girl's trip, for the next guy's trip, for the next concert. Constantly starting over, constantly eating your assets, constantly paying taxes. And then you get tired and you're like, man, I'd really like to just take a year off. And you can't, because you didn't save anything. You saved just enough to go on that vacation and take those pictures to make it look like you were doing something. And then you got hooked to people thinking you're out there like that. So now you have to fake this lifestyle. So you have to keep doing it. You never save any money. You're broke. Most of you are broke. Metrically broke. You own nothing. You're worth nothing. You're in debt. You are broke. But that's the result of a fiat standard and a fake it till you make it microwave lifestyle society. So that's where you are. It doesn't have to be that way. We don't have to live like this. Section 5, we're coming up to towards the end here. 21 is not reacting to market cycles. It is building for a future where economic output is denominated. I said demolished. I'm tired. Is denominated in Bitcoin, where capital formation begins on a base layer of absolute scarcity, and where corporate value is measured not in earnings per share, but in Bitcoin per share. The company is designed for that future, structurally, strategically, and culturally. We do not wait for the world to arrive. We build the infrastructure that will enable it. I love this. They identified a problem, they made a mission, and they're starting out building. Because they could have gone the MicroStrategy way and just copy what MicroStrategy did. Because MicroStrategy sorted out a solution for a few people, specifically them. They're going to be all right. I would say personally, my thoughts are Strive and Metaplanet. They're going to be all right too. But 21 Capital said we got to add some value, and we're going to build this from Bitcoin out. We're going to build the rails for the world to come to us. That way, as the world evolves, they're already there, established, running. Which brings us to the conclusion. 21 Capital differs from legacy structures not only in its asset base, but in its architecture. It is a Bitcoin native entity, unburdened by unrelated business lines, free to raise and allocate capital in pursuit of Bitcoin accumulation, and governed by stakeholders aligned with its long-term mission. It does not offer exposure to Bitcoin. It embodies exposure to a world restructured around it. The conclusion, not going to lie, hype me up a little bit. I think it's, I'm not going to say it's hype. I like it and I align with it, and it touches me in my Bitcoin part of my soul. Which is why it is in my amplified Bitcoin exposure portfolio. Now, there are a couple of things to understand about it. The reward drivers for this stock is the structural Bitcoin scaling. They're starting in third place. They already are one of the largest holders with 42,000 to somewhere between 42,000 and 43,500. Jack, on his Monday shows, if you guys aren't tapped in with Jack Mahlers, you need to follow him on YouTube. He's actually worse at this than I am. It's pretty funny. But it's a good show, and he does tell how much they actually have on there. It's somewhere in there. The number sounds about right. That holding in and of itself positions them amongst the treasuries, because I think out of all the treasuries, they're like number 3 or something like that. They have their strategic sponsors. They have backing from Tether, Bitfinex, and SoftBank, which provides capital access and deal flow. Jack Mahler also has Strike. Like, he already has a Bitcoin product, a Bitcoin native company up and running that works exceptionally well, in my opinion, with the exception of the minimums for the loan amount. But I mean, when you're doing stuff 210% above board, it is what it is. Like, it takes time to get these things to where they're usable for everyone. So it does require high amounts of Bitcoin on the platform to start leveraging it. That said, it is a centralized exchange, so I really don't keep my whole stack on there. I keep the active part. So like the part like that I'm building, I don't even have the active part on there. I'm still building it because like I haven't put anything on there from cold storage, because my first Bitcoin that I got, that is my savings and retirement plan. I consider that fully funded. I have like having over a Bitcoin. Cold storage never touches the net. You're never going to get to it. Good luck. But for me, that's a big deal. Like, that's part of my standard. Now I'm building another stack so that I can actively use some of it. And it's like, yeah, if things go south, something goes bad, I'm okay. The Bitcoin native operating focus is another key reward driver. Unlike a sidecar Bitcoin allocation on a legacy business, XXI's core mandate is Bitcoin financial infrastructure, lending, structured products, education, and media. So successful execution could create reoccurring cash flows that translate into them being able to buy additional Bitcoin. That also makes it so that they can buy Bitcoin without accumulating debt, which is one of the main things that people attack MicroStrategy about, even though their debt is so over collateralized, it's ridiculous. And it's a non-talking point, but like if 21 Capital executes correctly, they're not even going to have to worry about that conversation. Liquidity and access. As a New York Stock Exchange listed equity with substantial daily trading volume and institutional coverage, 21 Capital gives the traditional investors Bitcoin-linked upside in an account they already use. Now, I'm not big on TradFi. I am not a liker of TradFi, to be honest. But we are utilizing all tools, especially since I'm in a state to where I still got to go to work. So at that point, I'm like, well, going to work's like drinking poison that'll kill you. Using TradFi to like make it so that you don't have to go to work is like taking a small bit of poison to build inoculation. Like it's not going to kill you. So we gotta use it. Obviously, Bitcoin volatility is the major risk factor. Like there's really not much else to say about that. Aside from, you kind of get what you're getting when you're dealing with these things. Like it's not, people are going to call and check on you, especially if they know that you're involved. Like they're just like, oh, are you okay? Because at a certain point, people who aren't moving in the same direction or aren't getting the same results that you are, the only thing they can do is hope that it doesn't work for you so that they can be like, yeah, see, that's why I didn't do it. Because they've already failed. They failed by not starting, or they failed by they're going to start late. So all they can do is hope that you're having a bad time so that it justifies their lack of inaction and them being stuck where they are. And yeah, that's the road that you lead with Bitcoin, because as you have seen last week, we touched 62. This week, we're back up in the 70s. So it went from, are you okay, to, hey, did you get the bottom? Did you get some? And they're only asking because they didn't buy. Like you didn't buy at 62 either. So now when we go back to 100, people are going to be like, oh, you're lucky. It'll be like, you were asking me if I was okay when it was a 62. How am I lucky? I was buying at 126. I bought at 60, 62. How am I lucky? I made the moves. I moved some stuff around when I saw that we were hitting some metrics that were unprecedented that I wasn't expecting. I was like, oh yeah, like we need to sell off some of these dry powder cash reserve active positions and start getting those into cash generating Bitcoin touching positions. Let's get this money. No one's lucky. People are making decisions based on the information, the best information that they have. And we're following our process. Like it's called discipline. It's like when you do stuff consistently, even when it don't feel good, that's discipline. So we're going to leave it at that. This has been another Bag Talk episode. Let me know down in the comments based on what you've heard, what you've seen, maybe if you actually watch this. I mean, I don't really watch a lot of podcasts. I listen to all of them, but let me know. Do you guys think that Bitcoin is the next evolution of MSTR? Yay or nay? Is this a win or a W? Let me know down in the comments. Till next week, people, it's your boy Reckless Ray Dinero. This is Future Financial Strategies, and I am out of here.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Got a what I came for.